morning everyone and welcome to Market Fatafat right here on ET Now. It's a tempered move on the index. We're down to about 0.5%, but it's a big gash coming in for the broader end of the market, the mid and the small caps in the red. It's a weak market breadth at hand. Well, remember, this is the show where we get you all of the top stocks to watch out for in trade. What should you keep on your radar? We'll be telling you that over the next half hour. We have Soumya joining in, Ashish Kayal, as well as Hemen Kapadia and Siddharth Bhamre. Well, let's get started then with the first stock on the radar, and that is no doubt Tata Motors. What a shocker it was in the quarter gone by with the kind of numbers that the company delivered. In fact, the automaker reported a massive 27,000 crore rupee loss on the back of the impairment hit taken on account of JLR. The management did put up a brave front. They said that they are on track to expect a positive cash flow going forward despite the stress that they're seeing in China. In fact, not just that, you also have brokerages across the board reacting. You have most of them, though, maintaining a buy or an outperform stance. You have BNP Paribas, which has slashed the rating to reduce with the target price at 150. They believe that they don't expect China JV to turn profitable over FY20 to 21. The India performance could provide support, and that an imminent downturn in trucks is expected. The EPS estimates as well have been slashed. The stock has scarred in trade today, and as we speak, it's down and out in today's trading session, lower, seeing the biggest fall in the last 10 years. Well, let's move away from Tata Motors then and focus on Raymond from the broader end of the market. And Hemen would like to get in your technical analysis. Okay, we'll move on then to number 3 and pull up Aurobindo as well. It was a fairly decent set of numbers. Soumya, walk us through the details.
Well, I think, Awan, they were a strong set of numbers with sales up by 11% and were at approximately 5,269 crores. And this is the first time ever that the company has clocked more than 5,000 crore of sales. The US sales were also at $339 million, ahead of our estimates, and the gross margin stood at 54.6, impacted by one-time provisions. The net debt stood at approximately rupees 38.97 billion versus 39.96 billion in the previous quarter. Well, the PAT was up by 16% on a year-on-year basis. So I think the company reported a good set of numbers.
All right, that's the take coming in on Aurobindo. Hopefully we should have some stocks for us on the screen. Number 4 then, Union Bank. So that, let's get in a take as to what's happening here.
Well, Awan, interestingly, most of the PSU banks are correcting, and today one of the lead index in terms of correction is PSU banking index. Now, what's happening in Union Bank? 6% reduction in prices, as you are seeing on your screen. With that, we are also seeing fresh formation of short positions. Volumes in cash markets have already crossed last 7-8 trading sessions or more than that average volume. And the support, which was around 77, 78 odd levels for Union Bank, that has been decisively breached. So all in all, negative stance or negative data points from derivatives and technical perspective.
All right, volumes as well are high and the stock is reeling under pressure in trade today. Meantime, let's bring up a stock from the ever volatile ADAG pocket and check in on it, and that is Reliance Capital. Well, it's been through a fairly rough ride. What's the sense that you're getting? Is this a short covering rally, Hemen? Would you bet on Reliance Capital, or is it a complete avoid?
Well, Avan, if you give me a choice, frankly speaking, it would be a complete avoid. But having said that, it looks like short covering. There was huge volume yesterday. So bounce seems to be in the offing. Sustainability of it is a question mark. But if I look at the intraday charts, yes, bounce is on, and this bounce might bounce some more, Avan. But it's a question mark over the validity of the bounce.
All right, there you have it. That's the take coming in. There may be a bounce, but if one had to really take a call, avoid that stock. Well, let's move on then. MRF, you just heard out Mr. Chokalingam talk about it as one of his wealth creation ideas. But in today's trading session then, it's down nearly 3.5%. Siddharth, what exactly are the positions that we're seeing on the derivative side?
Well, needless to mention that these are, there is formation of short positions. Now, interesting part, Avan, that support, now this is a very high denomination stock. 59,200, around this level, there was a very strong support for MRF, and that has again got decisively breached. Now, the stock is trading nearly at 1.5 to 2 years low. So that is another point. and volumes are high in today's trading session in cash market. So all in all, though other tire stocks have shown some sign of stabilities, and in fact there were some buy calls initiated by our experts in names like Apollo Tyre, but MRF is not behaving like other stocks and it's in its own downward trend. So this may continue for some more time.
All right, the downward trend is likely to continue. There you have it. As we speak, the stock as well down nearly 3.5%. Well, let's move on to another stock in focus today, and that's Indiabulls Housing Finance. In fact, they have said that Japan's SoftBank is investing nearly 2,800 crore rupees of equity capital into its associate Oaknorth, a commercial bank in the UK. With this, the total equity capital in the bank could be close to 7,000 crore rupees, and they believe that Oaknorth is the fastest growing new bank in Europe, with a loan book currently at 21,390 crores. The stock, though, continues to remain in tandem with the rest of the market, 619, down 5%. Well, let's shift gears literally and talk about what's going on in Motherson Sumi. That stock has dropped from 142 all the way to 135. Is the trend looking rather bleak, Heyman?
Well, yes, I think if you look at the short term, medium term, long term, every time frame that you look at, Avan, I think we continue to remain weak and lower top, lower bottom. So we continue to remain in a downtrend. So not looking very attractive. We're seeing a 5.5% build up. I think it looks like a short build up. So further pain, yes, and Avan, the stock has also posted possibly a 1.5-year low.
All right, struggling in trade today at 134. Well, let's move on then and find out what's happening with respect to Varun Beverages. Soumya, what are the latest developments?
So, well, this was ET Now Big Exclusive, and we were the first to break the story to you. The company yesterday informed the exchanges that the board has approved to acquire franchisee rights from SMB Group to manufacture PepsiCo beverages in the state of Karnataka, Madhya Pradesh and Maharashtra.
All right, that's keeping the stock in focus today, but a tempered move, just up about 0.2%. Moving on then, let's talk about a sale, and that stock from the metals basket is seeing some selling pressure. In fact, Siddharth, let's understand what exactly we're seeing in terms of volumes today.
Well, firstly, before I comment on volumes, I want to mention that steel stocks were under pressure, Avan. And last few trading sessions, we have seen a strong bounce back in SAIL and Tata Steel. Now, you need to see why this bounce back was happening. There was short covering in SAIL. So last 2 days bounce back, we saw reduction in open interest. And now when stock has started correcting again, we are seeing fresh formation of short positions. So this is basics of derivatives, that when a stock which is correcting because of formation of shorts, going up because of short covering and again resuming downward trend because of formation of short, that means the trend is weak, and that is getting clearly reflected. Coming to volumes which you mentioned, stock has already crossed last 1 month average volume. So you can understand that volumes in fall are also high, which reconfirms the stance that stock and the sector at large is in negative trend.
All right, watch out. That's the take coming in on SAIL India. Moving right on then, Heyman, let's talk about Vodafone as well. And remember, this one delivered a pretty disastrous set of numbers. You did have the margins improving from the kind of lows that we saw, but there is that, there is that cloud hanging above it, that it's bleeding a lot of cash, there's intense competition. Let's understand technicals. Given that day after day you see acute volatility, what does one do with Vodafone?
Well, Avan, technically, I think there's an equally bleak picture. Stock is, I believe, at all-time lows, and nothing seems to be working. Yes, oversold. Some of the oscillators on the daily charts have signaled a crossover buy. So dead bounces in the offing, but I would not want to trade the stock. It's too oversold to short, and the bounces are very tenuous and unsustainable. So I think it's a no trade zone. If I were to look at levels, resistance at 33, support at 29, no trade actually.
All right, no trade zone. That's the word coming in on Vodafone Idea. The stock, though, continues to reel under pressure in trade today. Well, let's shift gears then and move on to the metals basket. Let's talk about Tata Steel as well, and lots to keep on the radar with respect to this one. In fact, we're expecting the earnings to come out later today, and we're expecting this time around that the India business volumes that could be a little bit flat this time around. That's the take that we're getting, that the volumes could be a little bit flat this time around. And in terms of the business realizations as well, that is seen marginally down sequentially. The business volumes are seen at about 3.2 million tons for Tata Steel. The stock as we speak is down about 1.5% in today's trading session. That's Tata Steel for you. And do remember, we're expecting the average domestic and EU sales realizations. That'll be closely watched out for. The M&A activity as well. Remember, after JSW Steel and JSPL put up a good margin picture, there is expectations as well that we could see a strong margin coming in from Tata Steel as well. And once again, it's expected that the India business will take lead. Well, away from that, at number 13 then, it's Bank of India, and that sure is unlucky for the stock because it's down 5%. Came in at 87. Where do you see the stock headed? Where are you placing your targets and stop losses?
Aman, 92 was support. Now we've broken that, so I think now 92 becomes a resistance and a stop loss. 17% short build up today. I think we are in a short and medium term downtrend. Further pressure, definitely. So I have a feeling that one can expect a price target of around 82 with a stop loss at 92 and further downside on the cards.
There you have it. That's the take coming in on the stock. On that note, we take a quick break. Come right back for more. Back with Market Fatafat right here on ET Now. Let's keep the countdown going then. It's Britannia that's in focus. Samya, run us through the highlights of the quarter gone by.
The company reported their numbers yesterday post-market hours. When the stock is under pressure on the back of a note on the brokerage note by Macquarie, they say they maintain underperformance stance with a target of 2,335 per share, and they see domestic volume growth at approximately 7%, which was actually below estimates. The management, apart from this, has highlighted slowdown in the marketplace, but say that things will neutralize going ahead, given the government has taken certain measures in the interim budget, which will boost consumption. And they say that they prefer Nestle over Britannia in the packaged food segment.
All right, that's the take. No wonder then that the stock is down 3126. That's Britannia for you, as the volume growth has missed street expectations. Meantime, let's pull up another PSU bank. Canara Bank is down in trade today by nearly 3% at 230. What exactly are the observations today, Siddharth?
We started by saying, Awan, that PSU banking index itself is down, so a lot of components are down, and we'll discuss Can Bank. But here's a catch. Yes, there is formation of short position, but stock is near its support. And unlike all the names which we discussed, be it Union Bank, Bank of India and others, where volumes have been high, cash volumes in Can Bank has been very less. In fact, it has not even crossed, half of the volumes what we have seen in last few trading sessions, which is unlike other PSU banks correction. So this stock might be correcting, but it is not supported by volumes.
Okay, that's the view coming in. Not supported by volumes, but nonetheless, the stock is down in trade today. Well, let's just take a moment to deviate then and focus in on the news and the flashes that are coming in on your screens. We're looking at the mutual funds and getting in a sense as to what has been the data for the month of January. Now remember, walking into the year 2019, there has been quite a bit of trepidation given the fact that there have been two big events lined up. Of course, the elections and the big budget, which is now out of the way. But what kind of flows have we seen from mutual fund investors? Well, it's been fairly encouraging. A net flow of about 65,439 crore rupees. This is versus an outflow that we saw in the previous month of nearly 1.36 lakh crores. The equity flows stand at 6,158 crores, a little bit tempered compared to what we saw. Was 6,600 odd crores last time. Remember, you did see a little bit of a disappointment in terms of the previous month figures into equity mutual funds for the month of December as well. But I think there has been quite a bit of conviction by the mutual fund investor as well, putting in money via the systematic investment plans as well, and that has come in higher. Of course, we'll be waiting for the breakup in terms of the data. The total AUMs, you have that number, and that stands a little bit lower than what we saw in the previous month, but 21.3 lakh crores. That is the total AUM versus about 22.85 lakh crore rupees. So the mutual funds for the month of January, you have seen some sort of a recovery definitely kicking in after a disappointing month of December, where also the trends over the last few months has been a little bit tempered. You did see in the month of November as well large outflows. Debt mutual fund schemes as well saw some outflows. So now you're seeing at the start of the year a marked improvement come from the equity investor, with the total net flow standing at about 65,439 crore rupees versus an outflow of nearly 1.36 lakh crores. And as I said, for the equity investor, what they've been monitoring as well very closely is that there will be some key events. There's been acute volatility as well, but the average Indian definitely had a taste of the overall mutual of putting their money into the markets via the SIP route, has reaped benefits, and that is why you're seeing the total AUM flows as well come in fairly steady, 21.3 lakh crores. All right, let's move away from that then and continue talking a little bit more about stocks to watch out for in trade. Let's shift gears and talk about Rain Industries. Himen, what's the take on the charts?
I would have a slightly contra call on this, Aman. We've come off for the last couple of years. Downside appears limited. We are close to long-term supports at 92. We posted a low of 98. Oversold, positive divergences. It's not a short-term call, but from a slightly medium-term point of view, I think the worst seems to be getting past us. And sizable, if not a good recovery, is round the corner. But this is a 3 to 6.
All right, that's the take on Rain Industries, down about 1%. Meantime, let's focus in as well on M&M, and you did see that the benefits of the cost reduction in Q2 has waned. We are closely anticipating the numbers as well of M&M and what they could potentially deliver. That stock is in focus. We're expecting the Q3 PAT, and that's largely going to be muted this time around, largely on the back of the increase in the tax rate. So that's a key parameter. But remember, it's been life in the slow lane, if you will, for the overall auto space as a whole. The December numbers haven't been all that encouraging. Yesterday was a complete howler from Tata Motors. But for M&M plus VML, we're expecting the revenues higher by 14%, 13,098 crore rupees. Margins are seen dropping on at about 13.8% on a year-on-year basis. As the benefit of the cost reduction in Q2 has waned, the increase in the tax rate, the increase in the depreciation expenses, all of that could hit the profits as well. And we're seeing volume growth in the auto and FAS segment of about 12% this time around. 688, that's M&M for you. Well, let's get right back to that mutual fund data then and assess it with my colleague Jayesh, who now joins in to talk a little bit more about how the equity flows have shaped up for the month of January. Jayesh?
Avan, doesn't look encouraging as far as the prima facie numbers are concerned. Let me just run you through the numbers. So for the month of Jan, the total inflow number has come in at about 65,439 crores. Remember that in the previous month we had a 1.36 lakh crore outflow. But what is more concerning is the equity number, which has come in at about 6158. Of course, this is equity plus the ELSS that we have. But what's really concerning is the third straight month of decline that we have seen for the equity flows. In the month of October, as far as the data that I have, it was about 12,600 odd crores. That has reduced to half now at about 6,150 crores. So that's the big disappointment. And also, if you have a look at the balance flows, those have in fact seen an outflow of about 950 crores. Now, this is, in the longest time that I have been able to see that we've got an outflow number for the balanced fund category. Shifting to the total asset under management, if you have a look at that as well, you'll see that the total asset under management has come in at about 21.3 lakh crores, which is marginal decline as far as last month is concerned. It's down about 7% and if you have a look at the equity number as well, the total assets have come in at about 7.4 lakh crores. That's once again a decline of about 6% overall does not look encouraging as far as the equity number is concerned.
All right, Jay, just for the benefit of our viewers as well, just give us a sense a little bit as to what the kind of historical data has been, because, I was talking about as well how investors are walking into this year with some very crucial events on their minds, such as the elections, the budget event, and that is bound to spur quite a bit of volatility as well in the equity market. So if you could just give us some sort of a historical breakup as to what the kind of data has been so far.
So Aman, what I'm picking up from the equity number is if you have a look at the month of October, the equity plus ELSS schemes, they had about inflow of about 12,600 odd crores. Now that has been reduced to nearly half of it or more than half. The current number has come in at about 6,158 crores. That's the third straight month of decline that we have seen. The other bit that I'm picking up is, generally we see a heightened inflow number for the ELSS schemes for the months of Jan, Feb and March. And once again, we are seeing that, there's equity ELSS has come in at about 1,244. So had this been a month which was, during the first 6 months of the calendar year, the equity number would still have been on the lower side. So, those are some of the primary numbers that we are picking up. But like I said, overall does not look encouraging because this is the third straight month of decline that we have seen for the equity flows, which is the most important one. But what's also the market will be watching out for is the SIP number. Of course, that does not come up with the press release, but we'll have to dial into the call, and as we speak, that call must be underway, and we'll get the SIP number as soon as possible.
Right. Thanks very much for giving us a breakdown as to what have been the numbers, the kind of trend as well that we've seen. The net flows at 65,439 crore rupees. As Jayesh also flagged off, the overall AUM growth for equity has come in at 7.4 lakh crores. Sunil Subramaniam as well joins in to just break down the numbers and give us a sense as to what he makes of the current data. Well, you have the overall net flows coming in at about 65,439 crores. This is versus an outflow of nearly 1.36 lakh crores. What do you make of the kind of numbers that we've seen for the month of Jan?
I think that basically you've got to look at it from an equity perspective. And, the continuance of the flows there, the SIP flows continue to be strong. So I think the important thing here is to focus because the debt market flows, have got affected by the crisis around various names and issues there, and as well as in the liquid segment. So I think the equity market flows, I think, are the key to focus, and they are quite healthy and strong.
Mrs. Subramaniam, what I actually wanted to point out is that we generally see that the last 3 months of the financial year, there's a lot of inflow that comes into the equity ELSS schemes. And once again, we are seeing 1,250 crores has come into those schemes. But if I remove that number from the equity flow, then, optically it will look even more lesser. So, this time we've got the comfort of the ELSS schemes, but the equity number purely has been, on the downside as well. Your thoughts on purely the equity schemes? Are you seeing any redemption pressures that have come into your house, or are any DSAs actually raising some concerns on the redemption front?
No, I think there is a normal pattern which happens. It is not a concern. So the two trends here which you should remember is that mid-October, SEBI had introduced regulations banning upfronts and, non-payment of any commission or anything to distributors through the MC, but everything to be routed to the stream. The second is that there has also been a reduction in the total expense ratio charge. So naturally, incomes for distributors and agents has come down, and the business model is significantly changed in terms of this. So I think that process of reassessment of business model by the distribution committee, whether they are banks or national distributors or independent advisors, is in that process of flux. So I think part of that is being reflected in what you see there. But I think that over the period of the next 2 months, that will settle down. So I'm not, from a perspective of interacting with our investors and advisors, there is no sense of panic in the investors in terms of the concerns around this. We don't see any kind of challenge on that front.
No, of course, there's no sense of panic, but what has actually happened in the last 3 months is that we have seen a reduction of the equity flows to nearly half of what we had in the month of October 2018. But the other part that I wanted to check with you, Mr. Subramaniam, was the balance flows. Now, this time around, we've got an outflow of about 950 crores. Now, the number may not look very big, but this is the first time that we have seen an outflow number since May 2014. So that is, a little bit concerning. What's your take on the balance funds going forward?
So see, the balance funds right from the beginning of the year has been steadily decreasing every month. And so this month it has turned negative because I think one significant thing which happened last year's budget was the taxation of dividends. And as you may be aware, most of the balance funds had in the previous 2 to 3 years being marketed as an alternative to fixed deposits and were giving out monthly dividend payouts. While these schemes continue to do these monthly dividend payouts, the taxation introduced by the finance minister meant that dividend was no longer an attractive option from an investor perspective. So I think over a period of time, the balance funds have been seeing an erosion in terms of investor attractiveness, and investors are now preferring to put their money into other instruments. So I think the balance as a category will stabilize at around these levels. I don't see that as a significant or very fast-growing segment of the industry.
Thanks for joining.
Hello?
Thanks so much then, gentlemen, for joining in with that perspective. With that, we'll wrap it up then right here on the show. 11,000 pat on the index. Coming up next, markets at noon.